Good morning. This is Chrissy from Solstice ATR. Hope everybody's doing great. Today is a Saturday morning, March. We'll be covering for March 7th through the 12th, the overall market and what can happen in the coming week. We use adaptive algorithm to create either side for the bullish or bearish scenario or side markets. You can find us on Solstice ATR, on Twitter under the handle Chrissy Farah, or on Discord ZOU pound 9345 as it is spelled right here on the graph. At the same time, this is my handle on Twitter. We use technical analysis to understand the weekly market overall for day trading as well as swing trading and finding levels. Remember, this is for illustration use only. We're not a broker dealer. Past performance doesn't indicate future results. Use at your own risk, and data may not be copied. Before I get on and go over different charts, what I want to do is one more slide. So this is something that I want you to know, that the market on Friday in the European zone went from bearish after the close to a bullish scenario, and it basically became polarized. That's what I call, going from one period to another, and it changed direction. We're going to talk about what the stocks are going to do in this volatile area. Is there a change in the air and the wind to go back up as of March 5th, 2021? We have to navigate and understand the risk, the time horizon for us if we are a short-term trader or a long-term trader, and understand the risk to protect capital. We will cover the indexes and the indices such as S&P, NASDAQ, Dow, Russell, the transportation, the banking sector, the VIX, the New York overall market, as well as Bitcoin. GBTC is an ETF fund. IEF is for the bonding sector, short-term 10-year. XLK is for the technology sector. XLV is for the healthcare sector. XLY for consumer discretionary. XLF is the financial. XLE. JNK, the VIX, once again, VIX, which is the fear gauge. IWM, small cap. Schwab, SCHX, and SCHG. Crude oil, as well as gold. Some equities: Apple, Baba, Facebook, Google, Melly, Microsoft, Net, Nvidia, Shopify, PayPal, Square, Tesla, and etc. And here's an error I posted while I was writing it. Be flexible in your thinking once again. Be open-minded from going from bearish to bullish. And you can see here how we went from a bearish scenario to a bullish scenario after the European close. Okay, let's first start off. I do have Amazon here. Let's go from the beginning. And I'm going to put the combination of the indices, pound slash ES plus NQ plus RTY plus YM. That's the Dow. As we can see, I have a 4-hour, 30-day range. We had in the prior month, that moved down in February 1st through February 15th, we had the high. Then in the last 2 weeks, we were range bound in this area, and eventually we fell back down. And yesterday, we basically caught ourselves on a double bottom on February 1st, moved back up. We reversed on the weekly fib from high to low. This is let's call it, whether you call this the zero or this is the zero line. We came back to the 50% and we closed right on the 61.8. Does the market next week continue to be going higher or not? We have to be open-minded for a trend if it creates a head and shoulder in this area for the combination to continue higher, or we break back up to this Fibonacci up here and reverse back down. So don't be biased to one side, because some of the sectors in the NASDAQ, things have been shifting from one sector to the other, from mid cap, small cap, large cap, and value play, because the S&P 500 or the NASDAQ 100 doesn't represent all the overall market in in the U.S. market, because there's over 2,500 plus stocks that are traded on the New York Exchange. Doesn't mean it represent the NASDAQ 100, the U.S. overall market. Because remember, there's vaccinations, there's reopening, and a lot of stuff that is going on that people are not talking about. So that's that. Let's take a look at the VIX. Oops, VIX. That's the VIX ETF for the volatility index. As we can see, the prior week when they did the change in the contract, we had that spike. We fell back down. In the last 2 days, there was, a little bit of fear because of the bond market, what was going on was Powell and interest rates. They're trying to keep the short term and pumping more money into the stocks, so into the bond markets, so the banks can be more easier to loan. Are these loans going to go to consumers? Probably not everyone. They're going to be able to get the loan from a bank. It depends what their situation is and their credit, worthiness, plus, the companies they are in, or individual basis. So we spiked up. Then on Friday, we dumped back inside the prior 2-week range. As we can see, this is the high, this is the low. The machine has a 61.8, 50, and 38.2. So if this one's not going to continue lower and it reverses, this becomes your 38, 50, and this becomes your 61 inverted if we're going to head back up in the direction in the market heads south. So keep an eye on the VIX to be open-minded in the direction of those moves. It will help you out. And I'm going to do something with the $TICK. This is basically monitoring the S&P 500. Oops, $STI. There. As you can see on the hourly, we had the most on both sides of the scenario. We were bearish in the overnight. You can see the minus 1,000, then we had a plus 1,000 up here. So the market switched from being bearish to bullish. We were bullish, we came down to bearish, then we went back up in bullish. If I go back to a 15-minute bars, you can see the movement went from bullish to bearish. Bearish, we grinded back up to bullish, and we stayed in the upper zero distribution most of the time on the 15-minute bars in an uptrend. So you have to be open mind to change from being bullish to bearish, because the technicals keep you out of harm's way. Let's go now take a look at some of the ESs and the NASDAQ 111 by themselves, or let's go to BTC, which is Bitcoin, and I'll once again 30, this is 15 days time frame. We can go daily, go 30 days, 4-hour chart, push OK. As we can see, we are in a symmetrical triangle on BTC. This is our monthly fib from the high to the low. We do have this professional gap we have not been able to fill. That's the first one. We do have 2 more at the low, but I'm considering the 29,000 as the line in the sand. I can draw a channel going up to connect these lines, and I do have 3 bottoms here. This is 1, this is 2, this is 3. These are higher low. This is a lower high from this one. So if this is a shoulder, this is the head of it. Is this another shoulder, or do we get rejection in this down channel to continue back down to fill partially this gap and break this channel and come back to the 200 SMA? I do have the weekly fib from here to here. Remember, my 50% is here, and that's my 38. We've been hovering between those 2 lines on the monthly, the 23% all the way to the 50%. If we end up not clearing the 23% monthly fib and breaking out, be careful of it. It may come back down to the 200 SMA and another major channel from down here on the monthly fib, which is the 6150, the annual chart fib extension. This is the annual high, and eventually come back to this area. I'm not being biased to being bearish, but you got to trade what you see in BTC. Let's take a look at gold GC. I'm doing it a little bit differently today so I can show you what's going on. Gold on the monthly chart has lost the monthly fib from 0 to 100 and fell below that 17, 14, 17, 18 area. As long as underneath that 17, 15 to 25, I'm going to be cautious of gold until it changes direction and the universe takes it back up. I am watching the annual Fibonacci chart, which is the 61.8. We have tested it uh, yeah, yesterday on Friday, I should say, in the market. We bounced off that 1692 area. It is very important that we do hold here to continue higher. If it does not, we may be seeing the Fibonacci extensions down to the downside where the 1640 is in 1585. I'm not saying that I am bearish on gold. I am saying this is an opportunity for us to buy the lower dip. And this is why I'm looking at these numbers down here, because they do match with the monthly fib. They do match with a major channel from here. If we get a nice rebound in this area for a scalp and it ends up to be a swing trade, that would be a great entry on gold unless we clear the 14, 17, 14 area, 1720. So that's gold. Let's take a look at CL, which is crude oil. Crude oil since, Biden administration and they closed, the pipes. I mean, we've been relying, which is really funny about, dragging price up from the $50 range all the way up, to the $66 already. And you can see it on the pump, when you go fill up, whether you fill up premium or regular. If you have a performance car or you have a nice vehicle, you put, instead of leaded, you put, super or plus, you end up, paying, an extra $1.50 on the pump, especially in California. You can see that in other states, you don't see it except, 20, 30 cents increase, 40 cents in the pricing, while, California, on oil, on gas pump, we're almost at $3.90 for super unleaded gas. So keep an eye on crude. If it does reset a little bit and come back in this range to get another bounce off it. Let's take a look at SPX. We'll do SPX first. As you can see, the SPX fell down and came back up. We are in a linear regression channel. We are above that 50%. If you take this line here and this line here, let's call this 0 and that's the 100. We do have a 50% and a 38 and a 61. In order to clear and continue higher, this was a prior level that I am watching the 38, 68, 70 area to continue higher to get a breakout and continue up. If it does not, be open-minded to changing the trend, because we have filled that partial gap, those professional gaps from the prior week. You can see it. I mean, we retested a portion of this, but we did not test 100% of the March 31st down move before February 1st. That's SPX. Let's take a look at the RUT. RUT, this is the Russell 2000. You do have a Russell 1000. You can look at the ETF, which is IWM or /RTY for the E-mini. As you can see, we grinded lower. We went side range for almost a week and a half from these ranges because we had that monthly, fib high on the February, and this was the February 1st area. We came, retested this area and U-turn. We're still a little bit under pressure, but we cleared that channel. We have to clear 225 in order to continue 30 area to continue to the upper channel going range and continue up. If we cannot clear the 61.8 fib, which is the F6, be careful of coming back to the 38%, which with these two numbers will flip and they end up to be 61 and 38, and we have to keep an eye on the 50. Let's take a look at the Dow Jones Industrial Average, which is the $ DJI. I do have here the monthly fib on it, and I kind of left it that way so you guys can see how I anchor my fibs. This is the February 1st. I did not go to the March 31st. Most people will go to the slow. I anchor my monthly month to months each time so I can look at the profile in relationship where the POC is. That's the low. This is the high. We stayed above the 50. We retested the 61.8. We got a nice bounce and continued higher, and we cleared the 61.8 on the Dow Jones Industrial Average. If you look at Exxon, Boeing, and other components of the Dow, they don't represent 100% of the U.S. markets, but they seem to be a little bit more holding the area. As you can see in the last 3 weeks range from here, or the last month from this area, when we retested, we were going sideways, we looked up, we fell back down in the prior 3 week range, pushed up, and last week we went low area to the monthly first week bar, which was, Monday, Tuesday, I believe. That was on February 2nd. We pushed quite a bit. We retested half of this bar. As you can see, we retested 50% of this, and we moved back up, and we cleared this down channel. Do we hold that 50 to continue higher? And that's the Dow Jones Industrial Average. Let's go now to the NASDAQ NDX. And I left this to last because this component consisted of tech, biotech, the NASDAQ 100. If we take a look at the Teslas, the Netflixes of the world, the Amazons, the Googles of the world, the Lulus, the Shopify, PayPal, the Zoom. Zoom is part of the S&P, but you can see that. You can take a look at the Nvidia, Mali, Baidu, Baba. As you can see, the NASDAQ has lost some of its momentum from last year. This was the annual high. We fell below the NASDAQ. We recovered a little bit of the move, came back up on Friday, because this was the Thursday's range on Thursday when we fell down. We have to clear the 12,780 area in order to continue a little bit more in the strength in the NASDAQ, and we have to stay above that 12.5 area. Be open-minded that there is sector rotations in the industry, and keep an eye and open mind on it. Let's take a look at AAPL, and I'll do a couple of ETFs at the end. As you can pull down here, this is the monthly fib. It grinded lower. If you can put a channel down here, because this was the annual channel, we fell down on the monthly. We recovered at the 17 area, which was a nice rebound. This was an annual Fibonacci, channel down here. You can see the linear regression channel coming from 9 to 21.20 till 11.20. So it connected. If you connect those two dots, it broke below it. It retested it on Friday in the overnight and Thursday, and bounced off. In order to clear, we have to clear the 38.2 fib, 1561, in order for Apple to continue higher. Let's take a look at the Amazon. I'm showing you some of these components that we are able to recognize the moves. You can see that linear regression channel down here between two. This is a wedge. In order for Amazon to continue, it has to stay above the 3,000 area to get to the 3,100. If not, be careful of that 2,988, because it can set it back lower. That's Amazon. Let's take a look at Google. You can see Google is totally different component compared in the NASDAQ 100. Has been after the earning report, this major high has pushed up, stayed in the upper distribution. The week before we fell down, tried up, fell down, tried up, and last week we were trying to push up. Eventually we fell down. We retested that 2,000 area, 1995 area, 1990, and you turned back up to the 2,100. If Amazon's gonna break, if we call this is a top for the 1 week, and this is a top for 1 week, and this is a third top for the following week, do we break up and get a full same distance from here to here, an upper extension to the upside? This is kind of an idea that you can trade. You can do a vertical, like 2 puts, bullish to 1 call, sell to finance, to see if it goes higher. That's one way you can do Google. Let's take a look at Netflix. Netflix fell down from the monthly fib. It came retested the fib low of the month. Can Netflix continue and clear the 61.8? This is the weekly from high to low. We are right underneath the 38.2 Fibonacci. This is very important for Netflix to clear that 525, 520 area in order to continue higher. If not, be open-minded to change. Let's do Tesla, and I'll do the ES last and the detail for you. Let's take a look at Tesla. Tesla, from the last time we were talking about the 820, 800 area, we kept saying to everybody, be careful, Tesla may be resetting a little bit lower. And eventually it fell down to this area, that 620 area. We got a nice rebound reset at the 50 Fibonacci. Couldn't continue. We fell back down, and on Monday, Tuesday, it rallied up, then eventually broke through this wedge channel. It was a nice short for 3 days, came to a Fibonacci extension, which is the 23.8 monthly fib. When it came back through it, going back up, you go long to try to retrace to the zero line. It did not make it all the way, but it made a little bit recovery, and this is how you can use the fibs and channels in order to trade in the direction of those moves. Let's take a look at a couple of ETFs, and I will go with NYA. This is the New York Composite Index. As you can see, the New York Composite Index, the monthly, it's in a down channel, but we recovered the last 2-3 week range. In order for it to continue, do we clear the 50? Do we hold the 50% fib and the 50 simple moving average in order to continue higher? Let's take a look at the XLK. That's the technology sector part of the NASDAQ 100, because they do represent about 28% of the NASDAQ, due to the fact that, heavily weighted in Tesla, Apple's, Netflix's, Google's, Facebook's of the world. I mean, I'm not going to go in super detail because I keep repeating myself. I'm trying to make it simple. We had that head. This is the head. This is the shoulder. This was basically, it looks like a double head, and we came back, to that shoulder, coming back to it. In order for XLK to continue higher, we have to clear the 50 simple moving average, as well as the 61.8 to continue higher, and we retested and closed in February's low. So be open mind. Let's take a look at XLV. This is the healthcare sector. Whoops. XLV. We can see that we recovered portion of the monthly fib extension. We retested the 50% extension to the downside down here from the zero line. We went down to the 38, 50%, and we U-turned and continued higher. Let's see if we can break out of this wedge. We can take a look at the XLY. This is the discretionary. We can see we are grinding in the lower, but we are in a linear regression channel. You can put a line here and a line here. In order to break, we're halfway through it. We need to finish the 38 and the 159, let's call it 159, 20 cents, 30 cents in order to get a breakout. Let's take a look at the IEF, because this is part of the bond sector, and I'll show you the TLT. You can see from Powell, talking about the interest rates and, pushing money into the market, about 41 billion in 2 days. They pushed it. They dragged the price of the bond quite a bit down, the 7-year, 10-year note, so they can do loans. And you can see we are in a linear regression down channel. Do we recover, or interest rates are going to start spiking up in inflation? So that's IEF. You can take a look at the ZN or the ZB, which is, the futures for it, or you can look at the TLT, which is the long-term notes. As you can see, it's in a similar situation. We reversed, continued in this wedge. In order to get momentum back up, we have to get out of this linear regression down channel to push back up, to keep interest rates at a low, so that way the bond pricing, the par value, goes a little bit higher. Let's take a look at a couple of let's do this one. I'm trying to get you guys some relationship XLI. I think we do have it as a, okay, sector trust, American industrial. This is an industrial sector, and the reason why I'm showing you because the movements have been changing from one sector to the other. As you can see, even in this move down in the last week or so in the NASDAQ 100, the XLI kept up. You can take a look at VTI. Let me show you a couple of things here. This is the stock market ETF. So I'm just kind of going through a little bit of different sectors so that way you can get a little bit of variety. IWF. Some people can't trade futures and they can look at the ETF sector to get a better opinion on the overall market. 10-year. This is the 10-year again. See, you can see the inverse relationship to the 10-year treasury because the spikes in it from the interest rates. So you can look at the inverse relationship to some of the equities and some of the stocks. So I hope this was helpful. Let me go back to show one thing on Ford. You can see how Ford is recovering because Tesla, they keep talking about Tesla in the news. They don't talk about General Motor. They don't talk about Ford. You can see that on the monthly, it's been range bound, holding above that $11.20. It tried to push above that $12.40 area, fell back in on from Wednesday because it looked above, fell back in, and it's trying to go back on the monthly and the annual Fibonacci fib extension right here. Let's see what Ford does. I'll show you General Motor. I don't know if I have it or not, or have fibs on it. You can see it's this is an old fib. This one here, I have to get rid of that purple one because it's a wrong fib. Remove drawing because I didn't anchor it for the monthly. I do have the annual high on it. We are range bound. Keep an eye for an open mind if General Motor clears that symmetrical triangle because you can see from here to here you can draw a channel. From the top down here you can draw a channel, and if it breaks up you can go long in General Motor. So I'm trying to show different one. This is XOM. This is as well ExxonMobil. Look to see if you can get a nice reset in this area to continue higher. Keep an eye on crude coming back for a little bit for another rebound. And let's go back to the last but not least 100, and I want to break this down a little bit more in detail in relationship to the gap from prior. This was what we call the professional gap. We filled a portion of it the week before here. You can see it, we wicked it and went back up. Then last week from Monday, Tuesday, we fell back down. Thursday, we had a major drop. We retested the February low. We didn't test the March, that reversal from that Friday and continued. We reversed right on that channel. We broke this channel. I kept it here to show the annual channel. You can see it from March 23rd, 20 till 10/31/20. So we went above it. My eyes are on the 3800 is a key area for me, as well as the 3792 in order to continue higher. We tested almost the 61.8 as resistance and the 50 simple moving average. My eyes are on the 50 simple moving average on the 4-hour chart to see if we can continue higher or not. We do have this down channel, and if you can connect these ones here, we retested this area. This is a very important area for the 3868 to clear in order to continue higher. And this is your monthly fib, the purple one from low to high, and this is the weekly fib from low to high on the channels. And you can use monkey bars or volume profile. You can go from standard to monkey bars to see how things do change in relationship with to where the POC is in the time spent. If I go in this area just in the last 5 days, we can see that the range, we were range bound up here, then we eventually fell down, retested. So the POC is here, the value area high is here, the value area low is here because this is the shadow. Then we pushed down and we closed down here. Then on Friday, we opened here. Where did we close? Where was the open? This one's showing you the open and close. This one is not showing. Oh, there it is. There's your close. This was the open. We fell down in the Eurozone. When we fell down, we reverted from the mean. We cleared, the POC value area low, and we reversed right on a weekly Fibonacci fib, and you turned back up above this was the annual fib for the S&P 500, we did close above the 37.53. This is a very important fib on the annual chart to see if the S&P 500 holds or not. And you use, the gaps in, where we clear. Once we cleared the value area low on Friday, we retested the POC and we continued higher. We over pushed. I had around the 38.08 as my line, or 38.13. We eventually cleared that quite a bit and pushed all the way up to the 38. You can see the high that was 38.50 on the daily chart, S&P 500, to close at the 38.40.50 because we got pushed a little bit. I had to take some profits off the table. And that was basically it on Friday. My most important area is the 37.92 and the 38.08 for me for Monday, starting off on the S&P 500. So be open mind to change. Don't be biased to wide. And if you need our assistance or help, you can reach out at Solstice ATR. And what I'll do, I'll put this chart back up. Remember to, do your homework. And at the same time, these are the handles that you can find me on whenever you need help, and you can DM me on Discord. Hope this was helpful. Look forward to seeing you. Take care. Over and